Welcome to the Mortgage Rate Weekly Market Update for the week of January 30th, 2017. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not kind to mortgage rates. Mortgage rates did end the week slightly higher than where they started. If you take a look at the bond chart on the screen, you can see the short-term trend is mortgage bonds have been a sell-off, which moved interest rates higher over the last week. But you see the green candle there on Thursday and then a follow-through green candle on Friday. That means bonds were able to find a floor of support on Thursday, follow through on Friday. So with that in mind, we're going to recommend floating your mortgage rate to start the week to see if mortgage bonds can rally off support and move higher, which would move interest rates lower. So again, recommend floating. Now, some big economic news last week. The first big report was the gross domestic product, or GDP, for the fourth quarter of 2016 was released. It came in at 1.9%. That was below expectations of 2.2% and down from 3.5% reported in the third quarter of 2016. Now, if we look at the GDP for all of 2016, the economy grew at a very modest pace of only 1.9%, which was a drop of from 2.6% in 2015. So gross domestic product is actually turned the corner the other way. The economy is in 2016 is not doing as well as it did in 2015 going into the new year. So 2016 was the worst year for GDP since 2011. So this could signal a slowdown in the economy. So we'll have to keep an eye out on that. But some big news: the Dow Jones Industrial Average broke 20,000 for the first time in history last week as a huge stock market rally that capped a rally that started with the election back in November. The stock market has just been on a tear since then, broke above the 20,000 mark. Now we're looking for hopefully a pullback in the stock market now that it broke 20,000. If there is a pullback, which historically there has been when you broke 1,000 mark, that could benefit bonds in the short term. So that's another reason why we're recommending floating to start the week. Then we saw weekly initial jobless claims come out on Thursday, and claims jumped 22,000 claims higher to 259,000 claims for the week. This report was worse than expectations of 246 by 13,000 claims to the upside. Still, claims very, very low, well below the 300,000 threshold. So even though they've jumped higher, still a very good report, good sign for the labor market. Now in housing news, two big reports. The first big report was new home sales for December 2016 was released. That's the number of signed contracts to purchase new construction homes, and it dropped 10.4% for November to 536,000 units on an annualized basis. So December new home sales was a miss, but new home sales for 2016 was up 12.2% from 2015. That's the highest year for new home sales since 2007. The median home price of a new construction home was $322,500, which was up 7.9% from 2015. So new home sales only contribute to about 10% of the market, but new construction is booming. That was a great year, even though December was a miss, still a great year for new home construction. And new home builders are looking for another great year in 2017. So it's still a great time to get out there and buy, and we're still looking for upward price appreciation. So that means your home should be worth more at the end of 2017 than in the beginning. Now, existing home sales for December 2016 also came out last week. It showed 5.48 million units were sold on an annualized basis, which was a 2.8% drop from November. But 2016 existing home sales closed at the best year in almost a decade. So the total sales for existing homes in 2016 was 5.45 million units, which was above the 5.25 million units sold in 2015, and the highest yearly sale of existing homes since 2006. So even though December was a miss, rates did spike up a lot after the election, so that could have caused the miss in December. But overall, 2016 was a great year from housing, and we're going into 2017 looking for another great year in housing. Home prices are still continuing to go up. There's a lot of attraction beginning in the market now. So if you're considering buying a home, now's the time to do it before rates move up and before home prices move up. In the local news, we've got a first-time homebuyer seminar coming up Saturday, February 18th in Newark, Delaware from 10 a.m. to noon. The next one in Dover, Delaware is in March. That's March 25th at the Dover Holiday Inn from 10 a.m. to noon. You can register for either one of those events by calling the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.